Hey guys, welcome back to another episode. Buy or sell? What the hell?
That
It's
was
your
better.
host. Yeah, like that one.
Yeah.
You never know what you're gonna get on the intro from me. But it's been a while since we've done the show, June 15th. We got a special guest today, a new addition to our team. I'm really excited about Brendan Nicole. I'm gonna let you introduce yourself a little bit. Um, but Alec, how are you doing?
I'm doing all right. Happy to be back. Busy last month, I'm sure you know. Uh, kind of glad we took a little break too because the markets haven't been doing anything.
No, no, it's been slow, and I think we're kind of the summer doldrums. Like I just said, Brennan here, he just joined our team on Block Edge Capital, and we're excited to have him. He's probably one of the few traders that I've run into in the space that has real trading background. Was at a lot of successful shops, 16 years on Wall Street, right, Brennan?
That's right.
And so it's rare. I mean, I run into a lot of, I guess, traders or people that are trying to provide some sort of market analysis in the space, and that's good. But it seems like there's a lot of YouTubers that maybe spent some time as a broker or, worked at different kind of old Wall Street shops, but don't really have the experience taking real risk and trading real size. So um excited to have Brendan on the team, and now he's I'm sure he'll be doing plenty of podcasts with us today. But Brendan, you want to just give the background for the audience? Everybody's pretty familiar with Alec.
Yeah, sure. So Brendan Cole, I started out my career on the trading side with J.P. Morgan. Went to Royal Bank of Canada after that. Traded OTC Tech for a few years before the creation of the algorithm really started to come about, and I saw that the growth curve for a young man on a trading desk on Wall Street was just kind of flatlining. So I left the sell side and found a buy side shop in California. Worked with those guys for 6 years and left that shop to pursue running a commodity related equity fund in New York City. Built out that desk and we ran it successfully. Built from ground up. Went from couple $100 million to $1 billion, and really had to really had to change my mo and how I view markets, kind of based on the temperament, the investment strategy. So I've got a lot of experience when it comes to sell side trading, buy side trading, and have been pitched the best and the brightest ideas from all the major banks for the last 16 years. So it's been a good run. But I recently ran into Jason and Alec and Regis with this team, and heard about what they were doing, and happy to be a part of the team. I think that my background can really add some real value to what we do going forward.
Yeah,
Yeah.
it's exciting. I mean, we're really just getting going. That's kind of what we've been doing behind the scenes, is just kind of building out this firm, this digital asset management company, and I'm just excited to have you with your experience. So I guess um, why don't we just weigh in on what the overall markets are doing, and Brandon, you can give your take on what you think big picture, what you see with crypto, and then we'll get into the headlines. I mean, I still think the biggest thing right now in markets is the biggest story is this dollar move. If you really wanted to generate any kind of alpha, it's been long dollar, short euros. Probably one of the most crowded trades on the planet was being bearish the dollar coming into the year, just like being short oil was very crowded. And I think you're obviously definitely seeing that unwind in the forex markets. But we've had a good call there. I've been very bullish the dollar. We've had some good weeks as far as our traders being short euros across a bunch of different pairs. We've been short, obviously, euro versus the dollar, short euro versus pound, short euro versus kiwi. And it's just more of the same. So we had a big day out of the ECB yesterday. Euro got crushed. It looks like we're going to close the week pretty much near the lows, and got a good shot at taking out that 115 area from last week.
Mhm.
Stocks are pretty sideways. They trade okay. I'm kind of wondering if bond yields kind of topped out here, just based on inflation. Really, what depending on what kind of index you're looking at, but I think we're at like a 75-month high. So front running that a little bit. We'll see. I mean, if the dollar continues to be strong, I don't think you're going to get oil back above its highs it made a couple of weeks ago. And if that's the case, it's going to have a hard time getting inflation to push higher on the margin from here. So I've been nibbling on 30s a little bit, but I'm just trading that back and forth. Really been playing a flattener, selling 10s when we pop and then buying 30s. And then as far as crypto goes, the story has been pretty sluggish. Really, really low volumes. I was looking at the futures data since futures came out, and last week was the lowest week over week volatility and volumes. So I don't know if that's a sign of the selling's dried up, or again, it's just more of the summer doldrums. But we've been trying to play a long-term long down here, kind of the 5,000 to 6,000 zone on BTC. We bought some stuff pretty well earlier in the week, like on Cardano and Salt. But still kind of waiting for that momentum to come back. Brennan, what have your thoughts been on markets?
I think you're exactly right with this summer doldrum really kind of coming into effect. You know, the one thing that we always used to have to play in time for, in the equity markets was generally the psychology of the way that people interact with the markets. I'm doing a little bit of reading on the correlations between cryptocurrencies and the stock market, which personally don't really think that there's a massive correlation between them. There's always got to be a little bit, but I think as you're running into the summer, people are starting to plan their vacations. They had a big run Q1, and I actually just got back from New York, where I spent 2 weeks there 2 days ago. Spent some time with some pretty heavy hitters, massive funds, and was talking about what they're up to and how their years are looking, and for the most part, I think a lot of people got very excited. Q1 they almost made their year in the first quarter, and then the anxiety rolls in. It's like, what goes up must come down. How do I defend my profits? And I think as you roll into times like holiday times, summer times, when the liquidities really start to dry up, volumes dry up, people really just want to defend their book and get as net neutral as they possibly can, until activity and volume really starts to come back into the marketplace. Where it was too easy for me in my days to move markets purely because of lack of liquidity. And that always happened in the summer times and that. So seeing everything kind of dry up right now just kind of makes sense. People have had a good run. Looking at the prices of the cryptocurrencies, makes sense that the people are really kind of like in a bit of a hold period as this runs right into summer vacation plans and the insecurities of where that low is. I always appreciate volatility. I loved watching the bubble run into last year and watching it fall apart. I think it really sets everybody's mindset in the fact that this is a very volatile space, and when you get down to these levels, I can't help but want to start picking away on the buy side on these levels too. But I always walk into those types of things, especially when you're when it is catching a bit of a falling knife. But we are hitting these levels that I think argue for purchasing.
Yeah. When you think of everything moving in a cycle.
And that's a great point too, Brennan. We did have stocks took off, right at the beginning of the year. That popped. And then obviously, I've always kind of said BTC. I mean, at some point, I think maybe down the road, it'll kind of maybe trade similar to kind of gold as far as a risk off, kind of flight to quality. But it's definitely, like you said, there's really not that high of a correlation between the big institutional money. But I mean, it is kind of been trading more of like a really, a riskier asset. And so you had stocks pop at the beginning of the year, and then obviously, there's 60-80% drawdown we had in crypto. I think you're gonna have a lot of people that made money last year are probably offsides this year.
Yeah, that's kind of what I was thinking, because when you look up that run up, a lot of people are saying it's a lot of people that just made some profits or wanted to chase those highs, and they got burned out, and that's what tanked Bitcoin and everything else following. But then you got to think about also those billions of dollars raised from ICOs. And right at about the end of the year there is when the majority of them are really going to start having to pull their Ethereum out of the market into fiat to start building teams, implementing roadmaps, and actually building the projects they promised.
That's a great point.
That's a fantastic point.
Yeah. I mean, I'm just trying to, I think people really want to know is when we'll see another shoot up to, all-time highs again. Is it going to be as quick as before? Is the energy, just going to come right back? Yeah. And I mean, is that what it's going to take? Are we going to have to, take out an all-time high for people to really care about Bitcoin and cryptocurrencies, at least from the mainstream?
Probably. I think it'll be a little bit of both. I think when it's going to be a little slower to get the institutions into the market.
Yeah.
I think those two big catalysts still are, if we can get a couple ETFs through that get approved,
well,
that should be big as far as flow, right? And then, the SEC news yesterday was positive, so there's still a lot of regulation that I think needs to just be finished. What do you think, Brennan?
Yeah, I agree. I think that I think regulation is a good thing. I think it adds a bit of legitimacy to people who, late last year you talked to anybody, they thought they were king of the world as they're watching their dollar, their wallets just rip. And the sell-off I think puts everybody back in check, and realizes that this is a marketplace. I encourage certain types of regulatory not interventions, but inclusions into this market, because I think it gives some people who may have been burned or who just love to be the naysayers of decentralized markets and the possibility of gaming, etc. I think a little bit of regulation is good for everybody, right? Add certain levels of security blankets that make people feel good. It's a great question as to what makes this thing turn. Everybody I talk to, it seems they are very technically focused in this, largely because they can't value things like they can a normal stock and what people's normal mindset is. So some of it probably also is how people view it, and how bad some people got burned. That said, I think that just from my last trip to New York, I didn't realize that some major institutions like Fidelity and some other guys had crypto trading desks, and when you get guys like that into a marketplace, I think it's very attractive from a volume perspective and a market stability perspective. So I think as we get more and more institutional players in the game, more volume comes about. It just continues to add legitimacy to the whole platform, and to have it run the way that it did last year, that was shocking to me. Every day I looked at Bitcoin, couldn't believe what was going on. And I think it'll be harder to do as more liquidity enters the marketplace.
Yeah.
A lot of things lined up for that run up last year. The mining reward was halved mid 2016.
Yep.
And 1,000 was the $1,000 mark was broke from Bitcoin. I think a lot of people kind of saw that, and that fear of missing out kind of hit in. Breaking an all-time high, huge round number, ceiling broke. Mm-hmm. And then we also had the CME launch the Bitcoin futures. I mean, so do you guys think there's any correlation between the Bitcoin futures launching on December 18th and Bitcoin hit its all-time high on December 18th?
I think it is more coincidence.
Think so?
I've always been I get people wanting to kind of put conspiracy theories around, hey, it's the futures is moving the market, but really, futures is going to move out the spot price. So it's, push the futures around, but there wasn't really that much volume there, relatively speaking. So, the cash market was already doing what it was doing. I think it was just one of those things where the timing was kind of coincidental. How many people were really long the cash market and then sold futures as a hedge? Probably very few. These guys are maybe that wanted to build out these over-the-counter desks, and obviously a little bit more sophisticated were probably in there. Mm-hmm. But when you think about futures or commodities and commercial accounts actually being big players in the oil markets or banks and the fixed income markets and treasuries, I can guarantee, I'm almost 100% sure that the big miners we're not out there hedging their Bitcoin with futures. I mean, they're just not that
Hmm.
sophisticated. Most of them are tech guys.
I agree.
What do you think, Brennan? On
I,
that,
I,
that's a good
I completely
question.
agree. I think arguments can be made on both sides of that question, but I do agree with you. I think again, there are a lot of things that were shocking to me as I really started diving into this space. A year ago, um, I couldn't help it. I couldn't help but laugh, and when I heard that you can all of a sudden you can buy Bitcoin on your credit card, and then and I think that got a lot of people excited. The news media that was around CNBC couldn't get off of the topic because of the wealth generation that was going on within Bitcoin. But I couldn't help but laugh when as soon as I heard that you were allowed to buy Bitcoin on your credit card. It just reminded me of Giselle, and she said she didn't want to be paid in U.S. dollars; she wanted to be paid in euro. I think a lot of us on Wall Street went out the next day and shorted the euro because that had to be top of market.
What was that level? Do you remember? I'm trying to remember what that was.
I wish I did. It was so long ago, but it was
160?
a very tight time frame before the euro then sold off, and we just laughed ourselves to the bank. It was great.
Yeah. Well,
So,
I mean, Alec, you bring up a good point on that. I think it's interesting from a timing perspective. Um, we haven't had a higher high in futures. If you look at the intermediate term on the daily chart since they've been established. So I think that's going to change. I haven't really seen the positioning. I think the positioning was pretty much on the short side 2 weeks ago,
hmm
which might be a good thing.
Jason, I think you bring up a really good point too when you're talking about miners being very tech savvy and a lot of people that enter this marketplace and what their investment prowess and background and knowledge of the ins and outs of the marketplaces are. I don't know. I don't know that. I kind of agree. The reason I agree with you in the fact that maybe it was just a coincidental timing period is that the people that I talked to who got involved. We have a decently sized family mining operation. My little brothers have traded, you know, their E-Trade account back and forth. Never once have I heard them really getting involved, in trying to find the correlations between the price of the cryptocurrency and what the future markets are doing. I just don't think that the general retail public hones in on that as much.
Mm-hmm.
Um, which I think begs to argue. I think that you're right in that it could absolutely be coincidental.
hmm Yeah, I mean, every other headline is, Bitcoin price manipulation. This way or the other, if it's Tether underwriting majority of the marketplace and pumping up price, or if it's the futures markets, hedging or whatever it may be, people are always looking for something to explain. And of course, it's probably manipulation without a doubt. It's just to what degree. And I don't know. It just seems like too much of a coincidence that the December 18th, you hit the high and futures launched.
Yeah,
Maybe
it
that
is
was just
pretty
the hype
interesting timing.
leading up to that news event.
Well, and the other thing, yeah, that could be too. I mean, if we think, obviously, any good trader knows you buy the rumor, sell the news. So the rumor was the futures are going to launch, and then as
Mm-hmm.
soon as that they actually do, there's your high.
Yeah.
And it's difficult to see what happens within this space as well, right? When you have a lot of coders and algorithmic minds that that probably forecast some of those things. I mean, a lot of I feel like a lot of the last crash that we had in the market, place was sentiment driven, was news driven. I mean, I kind of think 24-hour news is a terrible idea because they're just forced to talk about something, right? Because they're
That's
live
so
and they're
true.
on there.
I was just going to
And
say the same thing, Brennan. It's like they just I can't imagine trying to make up a headline every hour on the hour. It'd be like, I just saw Kurt Russell is going to be in a movie, a crypto movie. So that's the latest headline I just saw.
Yeah, but I mean, when CNBC was going back and forth about naked short sellings and hedge funds being the demise of the market, and it wasn't. It was there was a housing bubble burst, and I think there's faults on each side of the equation, but I think a lot of the times people, fear looking in the mirror and admitting that they were wrong or that they were greedy. Somebody making $100,000 a year shouldn't have three seven-figure properties.
Right.
It just doesn't it shouldn't happen. The math never works out that way. When you get caught off sides, everybody wants to point a finger, and when you have media doing things like that, then it only fuels a fire. I had a guy at a soccer game one time, my coworker's son's game, and this guy I didn't know asked me, he's like, "Hey, what do you do for a living?" I told him I work for a hedge fund, and he turned to me, and like the expression on his face just went so blank, and he goes, "Oh my God, I can't believe you just admitted that." I was shocked, but it was it's guys like that weigh into what the media can really do, and as cryptocurrencies have had their rise and their fall, they sometimes 24-hour media is a bad thing. It's not always you know people getting involved in the market that are looking to have toxic uh, liquidity or algorithms or predatory algorithms that do things. Oftentimes, these people didn't do anything wrong. They're operating under the rules and the constraints of the marketplace, and that's obviously one thing that we don't have. So the potential gaming of less liquid markets, it's easy to happen.
Yeah.
And it opens up an opportunity too, which is part of why we started, our rhythm project, is to help the average person. I mean, average is probably not the right word, but help people that want to get into crypto, they're new to crypto, help them get started, make it simple, but then also help them with the timing. I mean, the amount of people that just came into the market at 17, 18,000, 19,000 was just brutal. I mean, we sold for our subscribers, and we put out timestamp sales on the 16th, and then we sold again on the 20th. So I mean, that was pretty much the intraday. It was the day before the intraday high. But I think that's true for a lot of old Wall Street. I mean, there's so many perma bulls and perma, even in gold. I mean, the stuff that I just saw on Twitter yesterday about how gold was breaking out, it's been nothing but making lower highs for the entire year. It got actually crushed today. And these guys they're always one way. They have no timing process. So we've always thought that was an opportunity for us. If you come in, if you have a model, if you have guys with experience, we can help, independent traders, but even institutional guys, whether it's on the mining side or, just to try to trade directionally and help with the timing piece.
Yeah, timing everything and proper risk management is just so important, especially for people who haven't spent a lot of time either doing it or studying it.
Yeah.
Right. Like,
I mean, I can't imagine what's more important, because, and something that's missing when you have, like you said, the 24-hour news, and you had CNBC telling people how to buy Ripple. It was like $3.
Yeah.
$3 for Ripple, and they were telling people how to buy it.
Ugh.
I mean, what is the uneducated investor gonna do? I mean,
and especially after it just came from 50 cents.
Yeah.
We talk a lot about how and where a market comes from matters. I mean, if you're coming from a sideways market for 6 months at 280 and you go to $3, maybe that looks like a breakout. But when you're at 50 cents and you go basically to $3 in a week, and that market goes phase transition vertical, we can't be buying up there. And then you guys probably have the same thing. The amount of phone calls just from friends and people that aren't in the industry. I remember in December, like, hey, should I buy some Bitcoin up here? It's like, well, first of all, we're selling. So we've been long, we were getting heavy at 2000 and we've been piecing out. So food for thought, we're actually been selling. But if you want to get in this for the next 3 to 5 years, yeah, I mean, if you don't want to miss it, you buy a little bit maybe here, but you gotta, like you were saying, Brendan, the risk management is if this market pulls back 25%, 50%, don't rush all in up here. You got time to work into a position. Do it over like 3 to 5 lots, but don't plow in all at one.
Worst thing anybody could do. Sometimes you have a right idea and you just got the wrong timing. And sometimes, a lot of my friends used to call me up like, what should I buy? What are we into? And oftentimes I would just encourage people to just go buy the S&P, right? Just go buy, if you're not going to pay attention to it and you're not going to live and breathe it every day, don't think you're going to hit the ball out of the park every time you step up to the plate. And those who do, still profess. I mean, the best investment managers always say, I'm right 40% of the time, but on the 60% of the time that I'm wrong, I am so quick to realize that I'm wrong, and I get out, before it's bad. So, know what you're getting into, know what kind of a price point you're getting in at, and what you're expecting the upside to be when it gets there. Be ready to sell or be ready to be evaluated, because it changes every minute.
Mm-hmm.
Yeah.
So with that perspective, buy the S&P. So pretty much the S&P in this case is just buy Bitcoin.
Right.
40% of them market dominance.
Right.
You buy a little bit of Bitcoin, you have some skin in the game, and you're pretty much going to follow whatever the market cap is.
Yeah, I would agree with that. Yep. Um, what else, Alec, did we have going on today?
I don't know. I mean, we've been off for about a month, and not much happened within that month. Of course, there's always development happening. Developers don't care if Ethereum's declared a security or not. They're still going to build things on it. Yeah. But within this last week, I think that's kind of why we just wanted to do this podcast, is because there wasn't much to talk about this last month. But this last week alone is just, I've been dying to start talking about this again. Bitcoin, a commodity, but Ethereum is not a security. Well, the statement from the SEC. And I think that's the best case scenario for the space right now, because I think if it would have been ruled a security, I think that would have killed any momentum we had. I mean, probably at all for another year or two. Yeah. It'd take a hell of a lot of time to come back from that.
Oh, I agree. It just puts everybody that's trying to think about, especially the entrepreneurs. I mean, it's like, all right, they got some ideas. They're working on this project. They want to move forward. They got a 1,000 different challenges in front of them and things they got to figure out. If you want to keep putting them backwards or putting in the forefront, whether or not they're out of compliance or they're going to get in trouble, it just slows the whole innovation down.
I think one of the interesting things is that they said something can start as a security, but then transform into something that isn't over time through what they call decentralization. I don't think they really understand it that much, really the degree of decentralization, but that's still a surprising thing to say. I haven't been, focused on regulation for very long, but
yeah, it's definitely a big deal. And then it was interesting some of the other points they made. We're talking about ICOs as your token. Is the third party using it? Or are they really involved in, the marketplace after you do it? So in other words, are you buying back your token kind of, in an effort to, you're treating it more like an investment that argues for it being a security, or, how involved the third party is. I guess the third party, right, in that case, is they're saying the management team of the project that issued the coin, right? How involved they are, or are you just turning it over to the platform because everybody that's on your platform needs to use your token? There's a lot to discuss. It's a brand new concept.
Mm-hmm. Yeah, I'm kind of curious to what's next now. So they kind of hit how everyone was raising money. That's kind of what their focus has been, right? So what now that things have been kind of clarified on that end, do they start hitting exchanges? Do they start hitting, I don't know what else, privacy oriented projects? I'm kind of curious what's next now after they've kind of nailed that initial raising,
Yeah. I think the privacy coins, that they have a lot of risk from anybody that wants to be negative or kind of totalitarian in that sense. The privacy stuff is going to have a big target on their back. I'm not saying that I agree with that.
It's just low-hanging fruit.
What, Brennan?
I said it just seems like low-hanging fruit, right?
Yeah, it does. I mean, I would have loved to see Monero put on Coinbase's platform, but I just don't think they want that blowback or even have to deal with that.
Yeah, they have a lot to lose right now. So.
Yeah, that's true.
But
I think this regulatory stuff is just the quicker that they can put some framework around it, then it'll be easier to get like these ETFs through. And I think that will be the really first. What do you think, Brent? I think the institutional community that's the easiest first way in to the asset class.
I agree, and I'm pro it. I'm shocked that there haven't been ETFs, already.
Yeah.
I think it's a safe, if they're worried about, protecting, the general public, uh, an ETF is a fantastic way of doing it, right? I mean, it also, again, it all boils back to, what do you envision your participation level to be? And if you're going to be an active trader, and you're going to be up on all the coins that you trade, and you understand exactly what those coins, what those coins are based on, what those companies do, and if you like what they're selling, then then you take a stand, right? But for those who want to get involved, and you know don't have desk jobs, or don't really want to be active traders, then your options are going to be probably one of two things: either buy an ETF and participate, in a diversified investment vehicle, or let someone else manage your money or manage your crypto for you.
Yeah, yeah. And it's like all the old piping and all the old infrastructure from, old, I guess, old Wall Street is already in place. It's pretty easy to, you just log into your, like you were saying before, in your E-Trade account, and now these guys can be buying Bitcoin. It doesn't quite go in the direction of the new fintech decentralized concepts, where we've talked about that before, where if you're going to be long crypto, instead of putting it with Madoff, you can have it, on your own ledger and away from a third party custodian.
So those like ETFs, there are different ways you can structure them, right? They can be backed by, like, for instance, like straight gold, right? Well, they can be backed by an actual asset, or are they all speculative?
No, they're backed by, so when the way the ETF operates is they have to
Mm-hmm.
go out and actually buy up the underlying asset that particular ETF is trying to track. So the ETF is a big player in the actual market. They have to go in, buy it could be tracking the S&P. So they got to go in and buy baskets of all the different stocks to mimic that, and then they exchange it for quote shares, and those trade also. Brendan, you probably have some more insight on that because you were on the equity side.
Yeah, I think, concerning, I was just, while you were talking about that, I was just kind of thinking about ETFs in general, and the possibility of deconstructing certain ETFs, and we used to participate in a lot of swap baskets that we would create, and we would look at the underlying ETF, and based on how it was weighted, um, we would have the ability to pull certain things out, juice other names, to customize that ETF a little bit to how we thought the market was going to move. Um, I love ideas like that. Almost even going back to your ICO comment, and how volatile that space has been, yet how much money has rushed into it. I'd I'd really like to see more people, or read more about companies who are creating an ICO, not to just set the ICO in motion and leave it alone. All the best minds and all the best banks, whenever they brought a company public, always had a reserve that they would support their coin or their stock.
Mm.
When it hits the marketplace, you need to be an active buyer in the marketplace if it experiences some sort of weakness, to give a level of security and stability to those that invested in your idea and your project. I think this space is still so young, and there's so many fantastic opportunities that it's poised to reach. Um, I sometimes question, whether people are just too quick to get into some of these ideas without really fully thinking through how they can not only have a successful ICO, but how they can also show support for those who are buying their coin. And I think that is representative of management teams, and maybe management teams within particular types of ICOs should be better scrutinized. If you're going to look at that as a level of investment.
I mean, that's just so many good points in there. I hadn't really thought about that. It is true. I mean, any good investment bank, right? When they're underwriting that IPO, um, that was a huge priority for them.
Massive. I
Yeah,
mean, I can't tell you how many I've been a part of, day one, and or even secondaries, in the marketplace. And, let's just say, well, I don't want to use any particular bank's names because be scrutinized.
yeah,
To say major investment bank, brought, company ABC public, and when if that stock all of a sudden, there was used to be back in the day when somebody bring a company public, it really was the juice for a lot of investment, mutual funds, hedge funds. It was a lot of juice that you got, and there was a whole strategy into how you got better allocations. And if the stock didn't perform the way that you thought it should, it's shame on the investment bank that brought them public, and who were really trying to set the marketplace. But at the same time, I give them a phone call and like, what's going on? What are you seeing? Why is this weak? Oftentimes they would tell you, it's like, well, we have support, to buy at this level, and then if it breaks that level, we're going to support it at this level. And it's just healthy structure of marketplaces. And I'd like to see some of those things kind of come into these markets and give the general public and the investment, larger investment communities, a bit of a safety net in thinking that these things really are run right. And it's things like that I like for regulation. But then again, we've also seen, how regulation is just, it's just the demise of certain platforms. Largely because you have too many people making decisions that aren't educated enough in what they're making decisions on. So I think that there's a balance between what is good regulation and what is over-regulation.
Yeah, I mean, I was just thinking about that. I mean, look at the market right now. Alec, how much money you guys remember what Salt did in their ICO? We were looking at it the other day.
It wasn't too big of an ICO. I think it was like 10 to 20 million. But I mean, okay. I think they have like $40 million in loans already processed.
Yeah.
Wow.
It's ridiculous.
Well, that's good. I was just thinking, it's back at $1. It even kind of brings up in my mind what this idea of burning the token, that like Binance, part of their, I guess, their token economics is they're going to take some of their profits and, buy up the token and burn it. But I always thought that was kind of, to me, almost seems like a waste to me. I mean, maybe it's a new concept that hasn't really played out yet. But I mean, if you're going to buy back, I think their last buyback they did $30 million or something like that. They did 150 million in the quarter, or maybe they did 150 after they spent 30 million buying back, BNB coin. But to me, it's like if we get the market down at these levels, I just talked about Salt's at $1 or $1.30 the other day, and it's been as high as, I don't know, 2013 or. But I think it's, Brendan, I kind of want to hear your take on this. I would rather take that 30 million, buy back the token, that's fine, but put it on your balance sheet. Now you're holding your own token, and guess what? We know what crypto does. I mean, you go 10x on 30 million. Well, you got $300 million now of, on sitting on the asset side just in your own token. That doesn't mean that they're gonna be the biggest seller in the world, and it's in their best interest to go hit the market and try to liquidate all that and smash their own token, over a course of a month. That's stupid. But just to burn it, and you took 30 million and basically just you bought back the token, you removed it from the supply. But if I buy up the token, I'm still removing it from the outstanding float. It's on my balance sheet.
Right. I think it does several things. I think it shows, again, quality of management team. I always love to go back to almost as much as what I think the pipeline for a particular company looks like. Management team showing support of their company and putting some real money at risk, and showing to their investors, that they are there and they are buying and they do like these particular levels, adds confidence. To people who are either long their stock or coin, or who are looking to get involved in their coin. And oftentimes when those types of things were released, the marketplace really reacted. And I think as this space matures, certain things like that, will happen. I couldn't imagine that they wouldn't. It'd be reckless if it didn't. But you're right. I mean, now what do? You took some liquidity out of the marketplace, and we used to run studies that we would, on a weekly basis, that we would present at our roundtables, and it was just a study of our major holdings and what management teams were doing individually or as a company. If people were buying or selling, and there's platforms out there that would, that you could pay for, that would, that you could see on a chart, where these management teams were buying and selling their own stock, right? It's got to kind of come in and out of the marketplace, and you want the liquidity. Um, but I think that, yeah, I think holding it on their books is very important, and I think releasing it at strategic levels is great. And it may not be a stock price or a coin price reason for selling, as much as maybe you just needed to raise some cash because you've got some more R&D coming down the pipeline, and you need to spend money on doing that. So what do? Do
Right.
you issue stocks and bonds, or how do you raise the money?
Right.
And it comes in the quality and intelligence, I think, of the management teams and how they manage their coin. And
Yeah.
So you guys think that's a better option than buying back and actually burning it and reducing the
Yeah.
total circulation?
I think the burning it's a creative new concept because you can do that with digital assets, but I think it's totally misplaced. You basically just
Agreed.
spent cash. Spent all this cash instead of taking the cash and buying your token and keeping it as an asset that could easily. I mean, Binance, they probably bought back. I'm looking at the chart, probably between $13 to $12, maybe $14 is maybe their average. Well, their high in December was 24, 25. If when the market turns, Binance will be at new highs. So, I mean, they spent 30 million, basically just literally burned it. And instead of they could stick that token on their books under, as an asset, it goes up $10 from here. It doubles essentially. It would be a double from here to go to new highs.
Mm.
What's that worth? And again, like I've been saying, it takes the supply off. There is less supply. It just happens to be,
I think they did it strategically, like with the buyback and burn, just from a network effect where the space is still so small, and the PR and the amount of people that want to participate in a ecosystem where they know for sure the circulating supply will be cut in half. So they see their tokens as a store of value that are going to be, the circulation is going to be cut in half eventually.
Yeah, and I get that. I mean, these guys see it as a decentralized concept. It's like we can, beyond a doubt, cut the supply, and by burning this, and there's no chance that they decide they want to unload their token all in one day and crash the market.
Yeah, I mean, why?
Yeah.
I think that kind of is why people see it as such a store of value, and they hold on to it and they buy it because there's only going to be constant buying pressure from Binance. They're never going to have the opportunity to sell at a strategic level. There's never going to be any selling pressure by them.
Yeah, but at the same time, I mean, like to Brennan's point, if they want to expand, or what happens if they grow too fast, or they have a couple bad acquisitions, next thing you know, the company overall is in trouble. What happens then? And how does that affect the price of the token if these guys are gonna go out of business? Well, that's not good for the token price either.
And that was one of the reasons we monitored management teams and what they were doing with their with their stock. It'd be great to see. And I don't know if there's anybody out there that's currently kind of doing that, but I assume it's something that will come about, that you can track management teams within the coins and see what they're doing, because sometimes that's a massive indicator of how healthy or unhealthy a particular investment is.
That is interesting. I wonder if there's a way to do that, to look at that, guys, via the blockchain. Like you could figure out which wallets maybe, I don't know, Binance has. Then when there really are, that's kind of an interesting concept. Just if you could see, like Brennan's point, you could see when management's selling. You can see, the insiders have to put that information out there.
Mm-hmm.
Maybe that doesn't really exist in crypto market yet, but you can see who's doing what as far as on the blockchain, right? We can kind of figure out who's wallets are whose.
You can see how much tokens they have in their burn address. Yeah, they show everything on how much is going to get burned. They're pretty transparent on that. How much they buy back, where that's held, and when they actually send that to a wallet that burns it.
And here's something else to think about, I guess. So in theory, what's to stop Binance from issuing another token on the supply side?
Nothing really, I guess.
Because that's the whole point of the burn, is that, well, this is there's never be any more coins created. When we burn these, that's it. Well, is that really true? I mean, what's this? Just like a company can issue more stock. What's to really stop Binance from? You know,
That's a good question. I have no idea. That's a great question.
I guess it's just a trade-off they kind of made where if they were to sell it off, that means their tokens are going to be worth less. And I guess the trade-off was made that building that network effect was more important for their business. The token was just a tool to grow that user base and the demand and the use of their platform. It was just a tool for sales and marketing.
If that BNB coin's worth
it's worked
100 times what it is today, that 30 million is gonna shoulda, coulda,
yeah,
woulda.
but then you could say that's hard to say because look how much Binance the coin's already worth. Look how much it's already gone up. That's already successful, incredibly successful, which I think could be in part because of the marketing they had initially with not a dividend, but we'll buy it back from you.
Yeah.
But
well, I think we pretty much wore that topic out. It's probably a pretty good show for today. I mean, we're probably at an hour here.
Yeah, we're getting there.
Did you guys have anything else to hit on?
Not really. No, it's just good to be back. Hopefully start doing these kind of bi-weekly as news comes out, really. As long as there's something to talk about. I'm more than happy to talk about it.
Yeah, I guess we'll just kind of tell the audience as usual, if you want to kind of join in as far as what we got going on and our chat and everything else, it's still under jenkinsrm.com. It's free to come into the chat room. That's probably where most of our traders find us and kind of follow us through there. And we got some private crypto teams that we do some stuff with real-time alerts and a lot more based on trading and managing risk. So you can find all that inside the chat. Just message us.
Yeah, and give us a follow on Twitter too, Alex Jupsnis and Jason Jenkins, right?
Yeah, that's me.
Yeah, they'll be in the description. But that's kind of funny. Before this recording, I was talking to you, Brennan, about Twitter, and you kind of had an interesting point about not using social media when you were working at the firm.
Yeah, we were forbidden to do a lot of social media things. So, I'll be joining a Twitter account and start putting some feeds on. But I'm happy to be part of this team. I think I think you guys have created a great platform, and I think the risk management element and the education in that sophistication is so important for people who have never been exposed to it before. It's a fantastic tool.
Yeah, absolutely. And we'll have a lot more kind of what we're working on as far as our rhythm projects and what we're doing on the institutional side as we build out Block Edge.
Yeah, and be sure to give the actual podcast a follow too, because I think our next episode we're going to have our lead developer on, Noah Marconi, and it's always great talking development mixed in with markets and all
for sure
the correlation there at least.
Yeah, I learn something every time. All right, Alec, good stuff. Brennan, glad to have you. Thanks for hopping on. We'll catch you guys in the next episode.
All right, till next time.
All right, take care, everyone.